We on now. They respect us cause we on now. Money up, run the whole town, don't we? This power money can't slow down. Money won't slow down. Ooh, we doing a lot. How we got on top. How we got on the top. Network and hustle.
Okay, so you did fixes and flips first, or were they? Now it sounds like you're more buy and hold. Okay, so you're wholesaling first. Okay,
because I was broke. I had no credit, I had no money, so I had to get some money coming in. So I learned how to do wholesale.
and you were doing wholesaling at the good time too.
2000.
when it wasn't so saturated. There was.
I kind of saw the debacle coming. Okay, it didn't make any sense. I was like, wait a minute, how can you lend out to retail buyers 99.7%?
Yeah,
just a little bit of a down tick. It's insolvent.
And you got to remember, in some states, because I lived in Florida at the time, you could have loan to value above 100% of your property. Right. The first property that I bought, it was 110%. We left the bank with like $30,000.
Yes. Yeah. Yes.
It was amazing to me. I was like, why am I not doing this all the time? But then clearly 08, 09 let me know why people shouldn't have been doing that all the time.
08, 09, that's why I made that lion's share of my money.
Wow. Okay.
Actually running from the cows, I was running to it.
Of course.
Because I saw it was coming.
Okay.
A lot of my business colleagues back then were buying flippers.
Yeah.
I didn't think it was wise for me to share 50% of my profit with Uncle Sam. He didn't do no work.
Okay.
So why would I give him free money?
Of course.
Okay, how can I make sure I'm still legal, but keep the lion's share of the cash flow?
Of course.
So I began studying the tax code with my accountants and CPAs, and I said, okay, I'm going to buy a whole lot of properties. Now watch this. I actually buy a lot of properties, and I take home money when I actually acquire it. Every single time.
Okay, you need to break that down just a little bit.
If you'd like to learn how successful real estate investors make money when they acquire real estate and not when they sell it, click on the link below, swipe up, DM me the word to real estate to download our free ebook, Distressed Property Investing. The blueprint is in the ebook. Stay blessed. I'll let your partner and download the ebook today.
What's good, baby? It's your boy Dale. I'm back in the saddle again. Our motto is to buy, build. We already bought it already, so we already own it, free and clear. Refinance to long-term debt, cash flow. That is the motto. Cliff, man, is that a pretty strong motto, man? What do you think?
Man, the model is strong. Like, you're getting each piece of the invest, right?
What it do, y'all? It's your partner Dale and Cliff back in the saddle again for another edition of the Investors Edge podcast today, guys. Man, today is Friday. It's been a very busy day. Cliff, man, how you doing? You doing all right, big dog?
Yeah, man, doing good, man. It's been a long week, but made it to the end, man.
It's right, man. Did we get that bag?
Oh, yeah, we got the bag this week.
Yes, sir. Your boy did as well, man. Hey, man, if you could, guys, like, share, and subscribe. So when we come live, there's a little bit of bell there, man. Hit that bell. So when we come live, you come kick it with me and Cliff, man. We're going to jump right into it today, guys. I got to get on the date with my bride. It's been a minute, so we got to get it in a little bit, man, real fast. We're going to talk about today real quickly, guys. Man, hey, remember, President Trump actually banned Wall Street. They actually passed that. That was a bipartisan thing. They actually came together. Man, Wall Street investors hedge funds are flocking away from the residential market. Number two, guys, California, and there's a price dropping in your luxury market, man. Is it still luxury? I don't know. We're gonna bring in a California realtor to let us know what's going down. And lastly, man, crypto meets concrete. There's an investor that everybody knows that's blending crypto tokenization again, guys, with real estate investing, guys, and it's a game changer. As me and Cliff talked about, man, when it comes to tokenization, it's a big deal, man. Am I right, Cliff? Am I wrong, big dog?
Oh, yeah. It's going to be huge. Matter of fact, you had the CEO of Robinhood come out the other day, I believe it was actually 2 days ago or yesterday, and talk about how tokenization is going to change the financial world.
Ooh, it is. They have to go tokenization, guys, because They have so much debt. They got to inflate that thing away, guys. But hey, no worries about it. Let's get dive into it real fast, man. Here's our first topic for today, guys. Yo, man, Wall Street. Man, what's going on with Wall Street, man? It is getting crazy up in here, man. And we kind of expect this to happen because, Cliff, tell everybody what's going on with Wall Street. Back in '08, right, '09, Wall Street did the exact same thing by flocking into real estate. What actually happened? They bought wrong. Are we right?
Oh yeah, yep.
Bought wrong. Guys, they were buying properties, the whole subdivisions that needed work. They're buying like 200-300 properties a week. No one in their right mind can renovate 200-300 properties a week. So those properties that were actually vacant, they got vandalized. Am I right, Cliff?
Yep. Mm-hmm.
So Wall Street doing the exact same thing now. What's happening is that these Bamas, what they're doing is they bought a lot of properties. Now what's happening is when this new law has passed about banning, because what they were doing is they were driving up the price point by buying 25, 30, 40, 50% over the asking price. I don't know about you. If I am a seller, I'm going to accept a higher price point. Am I right, Cliff, or wrong?
Yeah, I mean, you have to.
Yeah, you got to. So what actually happens, the market corrected. And now what's happening is that calls for prices to go up, which made me inexpensive for the consumers. And then what happens with the consumers is Congress stepped in, which I think kind of properly, and said, yo, y'all can only buy up to a certain amount of properties because we got to have some stuff here for the consumers. Am I right, Cliff?
Yeah, I mean, I kind of disagree with that just because I don't think that the corporations buying the properties was really contributing to the value of the properties going up that much.
Really?
Maybe in some key areas, but I think they only owned about 3% of all the U.S. housing market. So
I agree to that.
And what's going to end up happening is those people who would typically buy are just going to shift to build.
I agree with that.
They're just going to do build to rent. And so what that does do is it makes the market, think about it. You have a buyer who buys 3% of the market, no longer there.
Yeah.
So the prices are going to fall. So if you're looking to sell your property, you just lost value.
Yeah. And my daughter's on Instagram. Hey, baby girl, how you doing? My daughter's in college now, so I got to have my baby now. But yeah, I hear your point, but I think you may be right in some form or fashion, maybe wrong too. But because anytime, in my opinion, to where someone buys a lot of property at an inflated price point, it's going to naturally increase the price point. Am I right? Am I wrong?
Oh yeah, exactly. Yeah, it's going to drive up prices. It does do that, but what it's also doing is driving demand. So what it's doing is if you're an owner, you're getting a premium.
Yes, you are.
So it sounds like what he's really doing is he's saying, I want to lower prices of homes, making the owners less wealthy so that buyers can step in and buy at a lower price.
Correct. That makes sense, guys. I can see that, guys. I can see that. Let's bring in a guys from Venture Out real fast, and they're going to talk a little bit more about this man and see what's going down. And let's see if me and Cliff agree or disagree with what he's saying. Let's get into it. Here we go.
The Wall Street investor sell-off just got even worse, and now CNBC is reporting that the number of homes for sale by Wall Street landlords has doubled over the last 5 months, and to date in 2026, Wall Street has sold more than 3,000 homes than they've bought. This is another trend now that's pushing down home prices in the U.S. housing market, and it's about to get even better because these Wall Street landlords were actually just banned from buying homes. The 21st Century Road to Housing Act has officially banned Wall Street from buying more homes, folks. So these investors, if they own 350 homes or more, they can no longer buy any more, starting in January 2027. And this is going to completely reshape how certain neighborhoods and housing markets across America operate. Now, the investors are banned and they're selling off. You can see investor purchases are down 50% on the US housing market since 2022, according to data from Redfin. And in areas like Atlanta, Jacksonville, Phoenix, Nashville, and Orlando, these purchases are down nearly 70%. The smart money was exiting the housing market 3 or 4 years ago, right when I was warning you guys about the crash. And we're actually seeing now this crash play out. If you isolate zip codes in the US,
I disagree with him on the so-called, I guess, pricing out, Cliff, because in my opinion, big dog, I think it's never a bad time to buy if you know how to buy right. Would you agree or disagree?
Yeah, if you know what you're doing, there is always a good time to get into the market.
Yeah, I mean that's why I disagree with him on that as well. Now here's my question. Now, if you didn't know what you were doing, you should have got out. You should have got out. If you know if you do know what you're doing, hey, do what you do. It is what it is. Let's get it in. Let's get it in. All right, let's keep going real fast. Here we go.
That have the most investor activity, prices are in complete free fall. This scatter plot is showing in an area like Atlanta, where I am right now, we have zip codes that are down over 20% in value already. You can see them here on this map in blue. Value's down more than 20% the last 4 years. And the reason that values are going down so much in these areas is because the investors stopped buying and the investors are selling. And the reason they're doing this, everyone, is because they know the jig's up. They know that it's not really profitable to buy existing single family. But what these investors are pivoting to is even more interesting. And what they're pivoting to is actually the neighborhood that I am standing in right now. I'm in a neighborhood north of Atlanta, and the really interesting thing about all these houses behind me is that all of these houses are rentals. Every single one of these houses are rentals. There's nearly 100 homes in this community, and around 10 are currently for rent, on the order of 24, 25, 2,600 a month. All of these units are owned by a company called American Homes for Rent, AMH for short. And American Homes for Rent is really interesting, everyone. They're the third largest Wall Street landlord in America, behind Invitation Homes and Progress Residential. And what these landlords like American Homes for Rent are now doing is they are either building these communities out of the ground themselves, or they're buying them in bulk from home builders. And in the case of American Homes for Rent, they completed construction on over 2,000 homes last year, and they are now a top 40 home builder in America. And so this is the big shift that I think a lot of people don't understand, is that these big Wall Street investors are now going to become home builders.
Yes,
in fact, Invitation Homes, the largest Wall Street landlord, they just purchased a home builder called ResiBuilt earlier this year in 2026. You hear these Wall Street landlords interview the CEO of Invitation Homes. He's saying he thinks this new housing bill is going to lead to lower home prices, but he thinks it's going to take a little while, and he thinks it is because of deregulation. So the other thing about this housing bill, the 21st Century Road to Housing Act, is it wasn't just about banning investors from buying, getting rid of red tape. It was also about increasing housing production, increasing housing supply. And one of the loopholes, you could say, that allows big investors to keep buying is if they buy newly built rental property or they build it themselves. Additionally,
so Cliff, guys, this is a licensed appraiser on the line. Cliff, is what he's saying correct? Are you seeing that in the market when you go out and appraise homes?
No, because I'm not seeing that in a major way. You're more seeing that localized to specific locations, to where it's most of it's on the outskirts. You're not seeing it downtown. It's the price is too high to really build to rent. That's going to be your smaller investors. Usually it's on the peripheral of the city where you're going to actually start seeing them build to rent, where they're doing. But I've ran across them. I've seen neighborhoods where it's build to rent, and they're turning around just doing the neighborhood next to it. They're literally just buying in the same area. So you can continue to see that.
Yeah, I would say a build to rent business model is perfect for today's time frame, because in my opinion, I let Cliff know this as well. I think it's harder to become a homeowner without going the leasing route. It's a lot harder. It's a lot harder versus if you have a good relationship with maybe a independent investor or a more established institutional investor as well. You can structure a deal to where maybe it's a lease purchase, a lease to own, or whatever it may be, or you lease for a long period of time, and then you want to do an option to buy. You can do that with the right strategy. I think if you do it that way, you can become a homeowner at a lower rate if you know what you're doing. You agree, Cliff? You disagree?
Yeah, I agree. The thing that annoys me the most is they should allow them to build, and that's fine, but they should be allowing lease options so that they can allow and then monitor that, saying, hey, on a lease option, maybe you cap it at 5% down or however it is. Because then that actually gives an opportunity to own if you meet the requirements.
Yeah.
So then you could take over. When you do build to rent and you don't have that option, I mean, they keep all the wealth.
Now I'll tell you this here. I'm going to give you guys some game. So write this down, okay? I'm seeing right now, I'm going to say this here. Without the subprime market, well, you have no market. You have A paper, B paper, and subprime. Really, the subprime market is where the biggest amount of buyers are located at. Would you, Cliff, would you agree or disagree with that?
Yeah, that's where opportunity is.
Exactly. Now I'm seeing loan products, FHA. Now I figured out actually how my aunt bought her house 0 down. A brand new construction, Cliff, because come with the incentives and an FHA program. She bought a new construction project, guys, for 0 down with this loan product. An FHA loan product gets us with a DPA, down payment assistance of the 3.5% forgivable. That's how she did it. But because of all the incentives paid back to DPA. So she got her money back. Because all the incentives. That's out there. That's because of the subprime market, Cliff. Now you agree, man? You disagree with that, Doc?
Man, I gotta agree with the whole thing, man. Here's the problem. At the end of the day, from my perspective, this is all great, and they can have those different programs to be able to do that. They have a lot of programs, to be honest with you.
They do.
So yeah, I'm for it. I'm for it. So I mean, if you could do things to help do it. I mean, the truth of the matter is FHA is already doing so much already. I mean, they're complaining. A lot of people are upset because they can't buy a home. But FHA is offering 3% down, what FICO's down to 550.
What? Huh?
Yeah, FICO's down to 550. Yes.
Damn. What's the rate?
Now the rate's high. Now you're gonna get anything below 620. You start seeing the points really pop up, right? You start seeing it go from 6.5 to 7.5, 8. But the point is, it's 3.5% down. And a lot of times you can roll in all the other costs into the loan.
You can.
So it's if you're going lower than that, you're starting to go back before 2008.
You are. Now, Cliff, is there a floor and ceiling on the purchase price when you use this type of product?
I mean, yeah. I mean, there's not really. So you can get. I think usually it's 100,000. Anything below 100,000, FHA starts to question.
What's the ceiling? What's the ceiling?
I think the ceiling's at 1.5.
Y'all better listen. Y'all better listen.
1.5.
Y'all better listen to this man.
But right now you have interest rates, and I think we talked about this last week with what's going on. The interest rates, I have a feeling they're not going down. I have a feeling 6 is the new 4.
I told you. Yep, I do. Because they can't stop printing. Guys, the debt is risen to $40 trillion. Let me say that again with my chest. It is risen to $40 trillion. That's not because of magic. It's because they kept printing some damn money. No matter if it's a Republican or Democrat. That's going to happen. So when you begin to print more money in the fractional reserve lending type of scenario banking system, what happens is it's just like helium in a balloon. It keeps going up and up, and it's going to pop. Okay, so they are inflating it up. Why? So they can move it over to the digital, to tokenization. That's why me and Cliff are talking about tokenization and cryptocurrency, because that's where it's going. Did you hear that the U.S. has now become the first CDBC on the planet? The first. They beat Japan and China. So they can officially digitize the dollar. So I told y'all, man. It's here. It's here, y'all. So, hey, this is when, if you will use the FHA type of loan product with the DPA, down payment assistance, right? And you have a lower credit score, you better become a good negotiator. And say, I need concessions here. I'll give you a price point, but I'm gonna need all these concessions. And you can get your rate down if you smart. Would you agree, Cliff, or disagree?
Oh yeah, if you should be negotiating right now. The way I see it is, if you're not doing buy downs, you're not doing it right.
You're not.
It's you got to buy the rate down at least 2 points from where I'm sitting. You got to negotiate it, figure it out. You pay half, they pay half. Something.
You're gonna have to, guys. Go ahead.
Oh no, just because that's where the market is right now. Because I'm telling you, when I tell y'all, I'm gonna drop some game on y'all. I talk to people every day who are buying and selling. Everybody with a sub 4.5% interest rate is not selling. I'm telling. Let me repeat that. They are not going to. They will rent before they sell. They will not sell that because they understand that they could rent this for a long time and they can get money today because the interest rates and where rental market's at. You can start in most of them $600 net a month today, and that's gonna go up over time.
Again, guys, he just gave y'all some game. Hope you writing this down, y'all. We giving y'all some nuggets today. Yeah, I gotta say it like I'm Nigerian today. Okay, today. Okay, but yeah, guys, that's what it is, guys. So hey, today I think in my opinion, this is a good time to buy if you're ready to buy. If you buy, make sure you have a negotiating hawk of a attorney. Also, when it comes to a realtor and a loan officer, make sure the loan officer works hand in glove with that builder if you go new construction, because builders are throwing money. Hell, we thinking about buying a new house. Like real talk, Cliff. I'm thinking about doing that my damn self. While you tripping? I found a property, man, in Fairview Cliff, man. It's a pre-foreclosure, fam, but it's in the TRO right now, and I think I can get in, man. They owe like $730. It's worth 1.1 now. It's 5,000 square feet, 5-bedroom, full bath, 3-car garage, right? And it has some water damage, but I could put about 50 to 100K into it. You know what I'm talking about? Put about 20 in the pocket, you know, the renovation. You know how we do that thing. And then what happens, Cliff, is it'll be worth about 1.3, 1.4 after I get done. Yes, sir. So, hey, deals upon deals. All right, guys. Let's go to our next topic, guys, real quickly, man. That one was good. I hope you guys wrote down. I hope you guys wrote down some stuff, man, because, man, this is pretty good. Now, next topic real fast. All right. California, come to the front of the congregation. You're back, okay? Y'all have been known for luxury, and you have been making some bad decisions when it comes to real estate. It is not caught up with you, okay? So your prices is dropping on your luxury market. It is. I'm not talking about the uber wealthy, none of that. No, we're talking about the luxury. 1.5, 2, 3 million. That's luxury in California, right? But guys, unfortunately, California, you're feeling it now. All right. So let's bring in a California realtor, and he's well known. He's very well known. Right? You guys know who he is. Let's see what he has to say about this thing real fast, Cliff. Then you and I will respond to what he has to say. He went on Fox News. We'll talk about this, man. All I'm saying is California, I'm sorry, but you gotta get this work. Let's get it in. Here we go.
Come on in, Josh Altman. This is your territory. Why are home prices falling in San Francisco, San Diego, San Jose, and Thousand Oaks?
Well, Stuart, thanks for having me back. California luxury is not dead, even though looking at those numbers, you might be fooled. But the days of throwing crazy prices and someone actually paying those prices, those days are dead. There's no more aspirational pricing. People have choices now. The buyers are smarter, they're more sophisticated, and they're not chasing an overpriced deal. When you look at California in general, there's going to be a lot of different sub-markets. And when you look at luxury, that's typically about the top 10% of every different market. So for instance, San Francisco, which is going to be around $2.5 million or more, San Diego, San Jose, up to closer to $3 million. So those have adjusted, but in those same exact markets, Stuart, you're seeing $1 million homes fly off the shelf. In fact, they're flying off on an average of about 30 days instead of the national average, which is about 60. So they're still buyers, they're not overpricing.
Now you tell me about Los Angeles.
Are luxury
prices falling there?
Again, a good house sells. If we price it correctly, Stuart, in the market, we're going to have a ton of showings that week, and we'll be in escrow by the end of the week. The problem is when we're up against a seller who still thinks his 2022 prices, that's where you're going to run into an issue. There are still buyers out there. The market is strong. We still live in this incredible place called California, even though politics are, not always where you want them to be. But it is still strong out here.
Is there a two-tier housing market? Luxury cash buyers doing pretty well and buying a lot of stuff up against people who depend on financing with mortgage rates rising. It's a two-tier market?
Yeah, it's two totally different worlds here. Understanding that the rates in the sixes right now are still going to weigh heavy on people moving forward. Those are higher payments than most people are usually accustomed to. When you're a cash buyer, you hold all the power, and that's what we're seeing. We're seeing a lot of AI money coming here as well. We're seeing some big deals that done. I think a house just in San Francisco just sold in Hillsborough for $70 million, and the buyer was under 40 years old. So cash is king.
So Cliff, man, California is a special place, depending on who you talk to. What's your assessment of what this gentleman is saying concerning luxury not being dead in California?
I mean, as long as you got buyers, I mean, there's somebody do good. You got to realize too, a larger proportion of the homes in luxury are going to be cash. Most of the homes in luxury are not financed.
Correct.
It's by cash buyers, so they're less sensitive to the interest rates. But it's also in unison with the stock market. So you could tell how well the real estate market's going to do by the stock market. Stock market's high up, you're going to see that flow over into real estate usually. So right now I think we're up 15% on the year in the stock market. So the luxury market's going to stay stable. Mm-hmm. I've seen a big drawback. Anything over about 500,000, I've seen a drawback. I've seen as much as 10, 15, 20%. In some cases, I've seen as high as 50%. So I think what most people, like he said, the biggest issue I find is that most people think it's 2022. They think it's right after the pandemic or those low interest rates, and they haven't adjusted.
That's what I agree, guys. Cliff ain't say no, not one lie as well. I think the California is a very different place. It will remain different for a reason. The politics are totally different. Depending on the area, I know Riverside is more conservative. LA is super liberal. I think they built, a total of, maybe 5 homes, 10 homes maybe after the fire. That fire happened, what 4 years ago, Cliff? 3 years ago? And they still, it's just trash. And I hate it for those individuals. But when it comes to the selling of it, I'm not surprised that $1 million, 1 to 1.5 is selling, because of the fact that that's what people can actually afford out there. Because typically when it comes to California, you are making a higher wage. You are, because the cost of living is higher, because it's guys, they got a gas tax. They talking about actually passing laws because they were pushing the EV mandate. Now they're trying to tax you on your mileage. So hey,
when you do real estate in California, you know this too. Typically, when you are in business, you flip a house, you do anything with business, you get your profit, and you pay your taxes at the end of the year. Now in California, you pay your taxes at closing. They get you at the table. They don't give you a chance to either, if you may have a loss on another property, well, you can offset that on your taxes.
Correct.
They don't allow you to do that. They don't take their taxes on every property you do.
Yeah, that's correct. Yeah, what's up, Steven? I see Steve. What's going on, baby? How you doing, big dime? DM me, Steven. I think you and I have been trading DMs. DM me. I think you and I want to get on the phone call with me. But yeah, guys, it's California, guys. It is praying for you. praying for you. It's just, I think Seattle's even crazier than in California right now. It's crazy up there in Seattle. It's crazy. Am I right, Cliff?
Oh man, the prices. I know that area well, man. I've been up to Seattle a number of different times. I've seen property. I've been in properties that you would walk through and go, "How much is this?" They say 1.6. It don't even make sense.
No.
I saw a property not too far from family. I said, hell, let me go take a look at it. Man, that thing was broke down and busted 800,000.
Wow. Man, it made no damn sense. Who in their right mind is going to buy a burned down property for 800 grand? Who does that? Idiots.
In Seattle, I don't know. They got money like that. You also got to remember in Seattle, I think the minimum wage is $20 an hour.
Mm-hmm.
So it just bumped everything else up.
Yeah. It did.
Yeah.
Hey, Callie, praying for you, y'all. Praying for you. I got a couple friends out there, and they love California. I can tell them, move, y'all. Move. They ain't gonna move, y'all. But guys, man, almost done. Let's go to our last topic, guys, and then we'll be done, guys, real quickly here. Here's our last topic real quickly. Let me get to it real fast. Last topic, guys. Here we go. Man, let's talk about crypto, baby. Crypto meets concrete. The mogul tokenizing real estate. The rich real estate mogul is betting on crypto when it comes to him buying commercial real estate. Clev, you have been saying for a long period of time, and folk actually thought you was crazy when you had said, hey, tokenization is going to, you talk about tokenizing and giving some type of ownership in some form of fashion to renters. Man, Cliff, my comment section went crazy. Talking about, this dude's an idiot. He don't know what he's talking about. Why would I give ownership to renters? And then this is happening. So, Cliff, man, I'm gonna let you go off, Doc, after this, Doc, because people called you an idiot. They really did. They like, this guy's a fool. And I'm like, nah, you just don't understand what's going on. But here is one of the OGs in real estate. I think he's one of the GOATs, in my opinion. Me and Cliff, we know what we're doing. But this guy's on another level, guys. I do, man. Uncle G, Grant Cardone, man. Let's see him talk about this thing. Here we go.
Crypto experts aren't quite ready to call the prolonged drop in Bitcoin's price the new crypto winter, but as performance gets close to hypothermic levels, Standard Chartered's digital asset analyst warning that Bitcoin could fall to 50,000 by year end. Okay, 50,000 by year end. Right now, it's at 68,131. The bank backed up that forecast by slashing its price target to 100,000 from 150,000 as a result of worsening macro conditions and investors trading it out for what, gold, whatever, heading for the hills. But one real estate investor is heading full throttle into the frigid winds, buffeting Bitcoin. He's Grant Cardone, the CEO of Cardone Capital, the real estate mogul, crypto investor, and widely followed business influencer, has 5 million Instagram followers, 3 million YouTube subscribers. Jeez. He is now melding concrete with crypto. We're talking real estate mixed with crypto. Grant, great to have you on the show. I can't tell you, I tweeted out that you were going to be on, and so many of the followers on X that I have were, yay, Grant. Can't wait to hear what Grant has to say.
Well, thank you for having me, and I hope the people that follow me, I hope that you didn't get too much heat for having me on your show, because a lot of these old crypto hands are going to say, oh, if Grant Cardone's getting into the game, real estate guy, then it must be the top for Bitcoin, which I don't think it is.
Well, and one of them said, don't throw any softballs at his head, Liz. You know, you got to go right at him. So let's go for it. There are just a few finite asset classes out there, and real estate and crypto are two of them. How are you mixing the two, and why?
Well, look, I've been buying real estate for 40 years, multifamily real estate that cash flows, institutional quality, great assets, and ran across Bitcoin about 13 years ago and looked at the possibility of combining the two, one that's visible, the other that's invisible, one that's very, very liquid, being Bitcoin, almost too liquid sometimes, and the other that's very illiquid, one that cash flows and one that doesn't. So it's like two financial vehicles that are opposites. You know, they say opposites attract, Liz. So we looked at putting these together. I'm not a gambler. I'm a very conservative investor. I like cash flow. I love real estate. But I don't like that real estate is very heavy. It's very slow to move. It's very, very expensive to fix. Bitcoin costs nothing to fix. There's no roofs, no plumbing, no HVAC, no evictions, no property taxes. So we combine the two. We have the largest real estate Bitcoin hybrid in the world. We've done 5 different projects just last year, and I expect to be the largest real estate Bitcoin hybrid that will challenge the old REIT structures.
Well, how does that work? Because, and I see you've got the 10X Space Coast Bitcoin Fund. That combines something like 300 apartments in Melbourne, Florida, with 15 million worth of Bitcoin. You've got a Miami River Fund, similar, South Florida. These are all in Florida, Boca Raton Fund. Tell me, and then you say that you pay out dividends for investors who put in as little as $100. When you say you're melding them, explain what that means.
Well, the $100 is that's not true. That's false. Okay. So we have, like the Bitcoin Melbourne project, we did it was an $88 million project. I bought the asset for $72 million. We added $15 million of Bitcoin to the purchase. It was an $88 million cost to build asset that we stole the asset. So we buy best in class institutional quality asset below replacement costs. Rather than just getting cheap real estate or what we believe is real estate, that's on sale or a discount, we just stack the difference, Liz, with Bitcoin. Rather than just buying cheap real estate, we end up with a great deal on the real estate, add the Bitcoin, we pay cash for both, and then that property cash flows, I think, at about 4.5% with, as you mentioned, $15 million of Bitcoin to purchase.
How can...
Cliff, bruh, hey, man, make it plain for everybody, man. What is Grant doing? What's he doing, man? What's he doing?
He's just combining assets. So basically, let's say it's the same thing as saying, hey, Dale, you got a house. Cool. I want to buy it. Hey, you know what? I also like that car in the garage. I want to buy that as part of the deal. Okay. And so that's all he's doing, is saying that Bitcoin is part of the deal. So not only are you buying the asset itself, you're getting a float of Bitcoin to go with it. So obviously, if Bitcoin goes crazy, cool, you get an upside. If it drops, then you kind of eat that, as the backbone of the deal is really the real estate.
Sure. Okay. Makes sense. Okay. Well, do you think it's wise for him to do that?
I mean, it's not unwise. I mean, I can understand it. I mean, it's just basically it's another asset the LLC owns. That's it. It's just if it had 10 cars in the asset and those went up in value, it'd be the same thing. Like, okay, when we sell that too.
Gotcha.
So he's just betting on an upside. That's about it. I mean, that's really all it is.
I think the upside is a good safe bet as well, because of the fact that, to be honest with you, real estate is going to, how he buys it. He buys it basically like we kind of buy stuff. He buys it at a below replacement cost. So he's buying it at a nice price point. He's right. He stole it. It's like whenever me and Cliff talk about buying real estate at below wholesale, that's below replacement cost. So that's all that is. Now, we probably buy it a little bit more deeper than he is, because his is Class A. We're more focused on distressed properties. He's more focused on Class A, which is the pristine type of properties. So our price point is a little bit more deeper than his. But he's still buying it. He's still stealing it. He's right. He's stealing. With Cliff, would you agree or disagree?
Yeah, I mean, pretty much it sounds like what he's doing is he's basically buying A- and B+ assets.
Correct.
And really holding them until they're A+ assets in a way. He's not getting a huge, like he said, he's giving a 4.5% dividend. That's below what the bonds are giving. So that means that he's not really paying you a strong cash flow. What he's trying to do is say, yeah, but as we raise rents over the next 3 to 10 years,
there you go.
That asset's going to go from 88 million to 100 million. And that's where your value is really coming from.
Yeah. He's betting on the appreciation of it. And it's a good bet. It's a great bet what he's doing, because he's buying Class A, Class B plus type of assets. He will always have a slew full of tenants. Specifically, as the cost of living goes up a little bit, right? And the dollar loses it really is buying power. People tend to want to downgrade, and they'll downgrade to apartment complexes. Specifically, he's in Boca Raton, Florida, where you normally invest at, or sometimes in Houston as well. But let's focus on Florida. Boca Raton, Florida, and Miami, Florida, those are pristine places. So what he's doing makes total sense. It does.
Yeah.
It does.
Because really, Grant Cardone's in the. He has to find good assets. Don't get me wrong.
He does.
But he's really into raising capital. Because if you can raise capital at 4.5%,
Yeah.
as a dividend, you could buy a lot of real estate in cash flow and do really well. If someone gave you, Dale, imagine someone gave you $500 million at 4.5% loan rate that you have to pay back. I mean, think about all the real estate you could buy that could cash flow 10, 15, 20%. And you just go all day.
Yeah. And the thing about it is, to be honest with you, what his rate, he's paying probably about 4.5%.
Yeah.
He's paying it because of his balance sheet, the cash in the bank. He demands a lower interest rate. He does. And he gets it. He's not paying 6-7%. Like for us to go out and build something right now, the rate's gonna be probably around like 11%. He ain't paying 11. No, he paying probably 4.5%. Non-recourse.
Exactly.
Non-recourse.
And I think that like and after he sells the property, I bet you it's anywhere from 9 to maybe 15 tops % return. So you know, when he sells the property in 8 years and you get an 11, 12% return, you're not really mad. You got a good return over that period of time.
Correct. He ain't hurting. He ain't hurting at all. So I mean, I agree with what he was doing. It makes total sense to me. Now, Cliff, real fast before while he's still on the screen, talk to the people, man, real quickly about why you believe that realistically inviting for sellers, I'm not saying about renters, inviting for tenants and landlords to kind of combine and giving up equity, so to speak, in homes via renters. Why do you think that's a good idea?
That's one word: incentive. I'm going to pay rent because it's my house I'm paying for. Right? It's the same reason why an owner does, right? I actually own the property. So think about it, you know, if you actually own what you're buying, your rent has more meaning. So imagine if you move from house to house, let's say even 10 houses in 10 years. You just kept moving. You will own residual equity in 10 houses that maybe in whenever they sell the property, you might even forgot about that house 10 years ago. They sell it, the property had gone up in value, and the rent you paid that year, let's say you get $1,000 dividend for $1,000 in value, the property might have sold and now you're getting $2,000 back. Right? So you got a return for just paying rent. Now imagine if you were to apply that across every renter in the nation. You've now made the renter and the owner on the same page. They both want things to get fixed in a way that's going to add value to the property.
That actually makes sense. That makes sense a lot, Cliff. Now, if I'm a landlord, why should I look at doing that now? What type of incentive for just me as a landlord could that actually offer me? Do I get more capital raising type of things? How does it benefit me as a landlord?
Basically, you add it as a premium, right? Okay. So you have the regular rent option. Let's say I came to you and said, "Hey, Dale, you could rent the property for $2,200, and when you rent it for that, you get the house as a typical rental, or you could pay $2,500, and you could start, and everything above the $2,200 gets distributed in a certain percentage back to ownership of the property. Basically, every time you pay rent, you are acquiring more value. You're acquiring the property every time you buy it.
Gotcha.
You're now, like, oh.
Now that's the case. Are we agreeing to a purchase price up front?
No, you're not. It's just like a stock. You're agreeing to the value of the property as it is, right? And you can use a baseline however you want to go. So you got to think the house as a business. Just the way you own shares in a business, you know, shares in a house. Now, again, the hardest part is the management, keeping up with all that. Because then at that point, think about if you had your portfolio, it's worth $1 million. You could actually, if you all broke it down in shares, you could, for some odd reason, you had a bunch of sellers. And when the value went from $1 million to $800,000, you're probably looking at your real estate going, the houses are still rented, the values are still strong, There's nothing wrong with these properties. Let me buy my own real estate back at a lower price.
Yeah.
And then when it goes back up to $1 million, you get to sell.
Yeah.
A premium.
Yeah.
So your house becomes like a stock market. And I'm saying that the tenants would have that opportunity to buy into that.
Makes sense. Makes sense, guys. It's about incentives. It's about it's really about creating capital out of thin air. Would you agree?
Exactly. You can, because it's tokenized, you probably can sell at a premium. You can sell your home at a premium because unlike the next door neighbor who has to sell 100% of their property in order to recoup funds, your home could be sold in chunks. You can sell it for $5,000 here, $100,000 there. It's different.
Gotcha. Now, would that dilute anybody at all?
No, not from the only reason why you would be diluted is if you initiate additional shares as you grow.
Gotcha. Yep. Makes sense. That makes sense. Okay. Gotcha. It operates just like the stock market. Gotcha. Guys, man, for those that were calling Cliff not too wise, he just gave you game. Let us know in the comments if you agree, disagree. Let us know, and we'll chime in, guys. But I think that's a really good idea. I think what Grant is doing makes total sense as well, also, and the incentive of tokenizing your home and structuring it as a stock market type of play can actually create a lot of capital for you in seconds. And since it's done within tokenization, it's not a 30-day time frame. How fast can they actually get that capital, Cliff, if they were to structure it that way?
It just depends. It depends on who wants to buy the home. But put it this way: if you own a home now, it's worth $100,000, and you tokenize it, you own 100%, free and clear.
Mm-hmm.
You might have somebody come in and say, I want to own this home, but I don't want to manage it. I'll buy 40% and leave you 60%. So now you still own majority stake in your home. You get to make the decision, but you just got paid out $40,000 today for that property to possibly go buy another one, and you still retain ownership. You still retain all your rights. And to the person who just bought it, now that it's tokenized, they can sell those tokens easy on the open market. If the value goes up, they gain a lot of stuff you can do with it.
That's how they're saying that tokenization is a $52 trillion type of thing, because you can move capital so fast.
Another point of this is when you start getting into it, that neighborhood that everybody has got a neighborhood that everybody wants to live in. The value keeps going up. Yeah. Now imagine if there was a real estate tokenized market. You could buy shares in that neighborhood. You could say, hey, I own part of that home that's going up in value every year. I own part of that neighborhood. You get that option.
Guys, tokenization could be a game changer for real estate. A game changer. And guys, you heard it from somebody that Cliff is being modest. He knows a lot about cryptocurrency and tokenization. He does a lot. But man, guys, real quickly here, guys, as we begin to end real fast, Cliff, man, tell everybody, man, about home appraisal, man. Tell them what's going on there. Tell them about what you do, how it works, things of that nature. Tell them that.
Yeah, just go to hunterappraisal.com, fill out a form, give us a call. We'll be able to help you out. Like I said, we do consultations, do appraisals, also help out with commercial. Just go to the website and we'll be able to hook you up.
That's it, guys. Also, real quickly, guys, as it is not uncommon, it's not common to have access to an appraiser. That is not normal at all. Okay, guys? So take advantage of what he's saying, all right? Also, if you guys want to know a little bit more about digital banking, right? We talked about tokenization. Hey, guys, there's a deregulation of the banking going on. You guys scan on this QR code, watch the free information, and see how you can potentially benefit from the deregulation of banking. You have traditional banks, legacy banks versus digital banks. And the digital banks are making a move right now. Again, just saying, guys. And lastly, if you guys also want the distressed property investing the ebook is right there on the screen. Scan on the QR code right there, guys. Go download it. It's free, man. And got a little something special for you guys as well. If you're wanting me and Cliff to walk you through the actual download of that book, that's actually offered at the exact same time, guys, as well. So you can actually have us walk you through that book step by step, guys, and actually walk through a deal as well. So again, just saying, guys, all right? Well, guys, Cliff, man, hey, football season is back, Cliff, man. Are you going to watch football this weekend?
Yeah, I'm going to try to catch me a game. You know what I mean? It's been a little while. It's nice to see it start that new cycle over again, so I'm ready for it, man. How about you, man? I know you're ready for this. Your Cowboys lose, have another bad season.
Here we go. There we go. Actually, I am optimistic about my Cowboys this year. They made some strong moves. We just signed Von Miller, say it with my chest. Okay. Von Miller. We got Caleb Downs in the draft. Right, he should have been number 1. We got him at 11. Thank you, G. Hallelujah. We have the best receiving core in the league. Probably top 5, top 6 quarterback in the league, guys. And that D-line, though, oh, my God. That D-line we got is sick. We just signed Quentin Williams to a long-term deal. We looking pretty good, Cliff. What them Saints doing, Cliff?
We all right, man. We had a couple injuries already. We got a couple injuries in preseason already, but we're gonna bounce back. I think we're trying to recruit because we had a Hall of Fame quarterback.
There we go.
Who was recent, not one of them old quarterbacks. You got to go back in time. You got to turn back the dial to really get to the Cowboys. But we had a Hall of Fame quarterback just leave, so now we finally found our franchise quarterback. So I think we're gonna be all right.
Yeah,
we're gonna be all right.
And who's that franchise quarterback? I was playing the violin for you. Who's that franchise quarterback? Who is that, man?
We got Tyler Shuck. He did all right. He's in his second year.
Who?
He's in his second year. Last year was a rookie. So
what's his name?
Tyler Shuck.
Who?
Man, you already know. You're gonna hear a lot of it this next year.
Tyler Shuck. I mean, that don't sound Hall of Fame like. It don't sound.
He's in his second year. Hold up. He's going into his second. He only played 9 games.
Well, you said it was Hall of Fame. So
hold up, man.
And what you said?
Could be. We don't know yet.
Okay,
we could be. You know,
how did this Hall of Fame how did this potential Hall of Fame quarterback do last year?
Well, he did all right. You know, he had a couple 300-yard games in his rookie year. He went 5-4 rookie year. You know, so he's coming along, man. But he's older, so he's 26. Going into his second.
So he getting a little old. He's a little old, man. Okay.
Yeah.
Okay. All right. Now I would say this here. You made a face about the receiving core. Now,
you said the best in the NFL. That's why I made a face.
That's what I said. CeeDee Lamb. Okay. George Pickens. And we got a sleeper now. Of course, we got Turpin. You know, the speedster. Now, it's a guy that's been balling in camp. Balling. I mean, so much so you got the veterans saying, who is this dude? Quentin Brown. Remember the name? Quentin Brown. He in Seattle, I know it's preseason, he had 3 catches for I think 83 yards. No, 63 yards, 2 touchdowns.
Preseason.
2 touchdowns. Yeah. Oh, hey. I'm not just saying that. These are the vets saying this here. Vets on both teams saying, who is this dude? Who is this guy? He cooking dudes. And they are scrimmaging the Saints. He cooking. He cooking y'all just say
we got to a fight. That's right.
You know what I'm saying? He cooking y'all, bro. Quentin Brown, you know number 6, you know him? You know him? All I'm saying is, hey, I have never been this optimistic about the Cowboys. And the reason why is because Jerry Jones is finally getting out the way, y'all.
What you mean? What's Jerry doing?
Man, here is my opinion. Because Jerry's moving differently. Brian Schottenheimer was a surprise hire last year. And Jerry always says, you know, it's my team. And we said, we know it's your team. I believe Brian Schottenheimer said this here. All right, Jerry, you can go ahead and hire the DC, the OC, no problem. If it don't work, I got to come and do my own thing next year. What happened? Didn't work. What happened? Now we got a new DC. He's fighting now. Brian Schottenheimer, he's calling the offense now. It was an overhaul, and I believe Brian Schottenheimer was one that actually wanted Michael Parsons out because he was a cancer. Just look at it. Is Jerry moving differently? Is he moving differently?
I mean, he might. I mean, you losing 20 times in a row, I'll do that to you. You know what I mean? Your opinion better change.
Okay, people love to talk about us losing a lot. How many titles y'all got picked up?
Baby, it's okay. You're talking about. You want to talk about the good old days? You want to go back?
I don't.
I mean, I'm trying to think. The last Hall of Famer y'all had, I think, is on AARP. That's right.
Last Hall of Famer we have AARP.
Yeah, he in the chair, rolling, man.
Why you lying? Emmett is still walking. Michael's still walking. Troy is killing the game. What are you talking about? What you talking about?
1995. You talking about 1995? 30 years.
Hey, man. And to be honest with you, they've been snuffing my boy Darren Woodson. Darren needs to be in the Hall of Fame.
Oh, I don't know. He's borderline. He's a good player.
What?
He's borderline.
What you mean borderline? What you mean borderline?
Borderline.
Huh? Now how can Luke Kuechly get in the Hall of Fame and not Darren Woodson? Luke Kuechly. The hell?
Luke Kuechly is a beast.
He was no Darren Woodson. He got 3 titles, player, and a couple of defensive players of the year. What are you talking about?
He was good. Don't get me wrong. I'm not saying you were bad, but Kuechly was because we played him twice a year his whole career. So I got to see him, and he was a monster.
He is no Darren Woodson. Let's stop this playing. Let's stop it. You gotta be honest, okay? I know you biased because it's damn Saints. The who that Nason? Who that quarterback y'all got? Did you say it's Hall of Fame? Who that? Oh my bad.
That's it. Man. Y'all go see. Y'all go see.
We go see.
Hold on. Who's he playing in the preseason?
Y'all playing, man. Yeah, y'all playing at the crib. Yeah, we should go to that game. We should go to that game. I know it's preseason. Game? It's next Sunday.
Is it next Sunday?
It's next Sunday. This next Sunday, yo. It's next Sunday, yo. Yeah. Next Sunday. It's next Sunday, babe.
Okay.
Yeah, y'all didn't want to see us in the regular season, so we're gonna bless y'all in this preseason. It's all good. I understand.
We got probably one of the best wide receivers in the league with Olave.
Who?
Olave, beast.
Huh? He's a beast. What's his numbers last year?
Man, he was hurt, but he still had like 1,200 yards, 7 touchdowns.
Hold on.
He was hurt like 3 games.
I'm smelling cap. I'm smelling some cap.
What's Olave a month?
Let me see. I'm smelling some cap, y'all. Let me see. Okay, how you spell that dude's name? Let me see. Saints wide receiver Olave. Olave. Let me see if I can. Okay, let me see. Chris Olave. Okay, born 2000. Okay,
1,200 yards and 9 touchdowns last year.
Let me see. Let's see. He had 11-63. Okay, yeah. Oh, okay. He was all right. He was all right. Okay, he was all right.
That was with a sorry quarterback for half the season.
Sorry quarterback. Okay. Now, was he the only one that was really catching the ball, or was it other people too?
Nah, that's pretty much Olave is all we had because we had to reset.
Okay, so
we had to reset.
What you're telling me is he was the only one that was really catching the ball, so that's why he got all the damn yards. I got you.
We still had Kamara. Kamara's a beast, underrated because he was hurt one season. Everybody forgot about him, but he's still good. I think we're gonna be better this year. Last year we didn't do all right. This year we're gonna be better.
Okay. But man, yeah, they play. Who did they play, man? I'm trying to figure out who they. Thursday, Sunday. No, okay, that's last year. I want to see this year, y'all. Come on. But anyways, guys, we're gonna see y'all. But hey, y'all, all I know is, hey, I am optimistic about my Cowboys. I am this year for the first time in a long time. I'm very consistent. Are we going to Super Bowl this year?
Last year? What you talking about? You said, I'm optimistic. You was optimistic last year.
I was not. No. What I said last year, I said, we ain't going to Super Bowl. Stop playing. I can see us getting into the playoffs, losing in maybe the second round. That's it. That's what I said. This year, we just losing.
Just losing. You know, whatever your goal is, you're not going to achieve it.
So here's what y'all do. This is what I think is unfair. Every single fan like Cliff, I call them, they got the Stephen A. Smith syndrome. What they be doing is if you don't win the Super Bowl, it's a failure. It's a failure. But there's none of that same fervor when it comes to the Saints. Never is. Y'all get all the grace. Oh, it's the Saints, y'all. It's okay, y'all. Hey, have faith. It's the Saints. Trash. And you know I'm right. You know I'm right. Stop playing. You know I'm right.
Friday, the 28th, Cowboys Saints preseason. It's the last preseason game. So we're probably gonna have some starters.
It is. And the thing about it is I'm waiting to see what's going on. So you're gonna see CD playing. And they got people on Alonzo, man, sit your ass down. Talking about the damn Patriots. Get out of here, man. Tom Brady ain't there no more.
Yeah,
Shut up.
Man, it's amazing.
Amazing. But it is what it is, man. It's all good, man. But hey, y'all, God bless you guys. Had a little fun at the end, man. And how about them Cowboys?
Man, let's go Saints, baby. Who that? Who that?
They don't
You already know.
Who they? Who? Now, one last question. How y'all who that? And then you have Cincinnati, who they?
No. It's who that. We the nation right here. Who that nation? We the nation. I don't know about all Cincinnati. They got something else going on.
So did y'all steal it from Cincinnati? Who had it first?
They stole it from us.
Are we sure?
I don't know, but I know. You know what I'm saying?
Anyways, y'all. Hey, y'all. God bless you guys. See you guys next week. Hey, Cliff, go and say you are what, Chris? You are one.
You're one deal away.
One deal away, guys, from changing your life. God bless you guys. See you guys next time. All right, y'all. Peace. What's good, guys? It's your partner Dale here, man. Hey, I always say that when it comes to real estate, I think this is the best time. The next 3 to 5 years is the best time, in my opinion, to begin to invest in real estate. Whether you are a seasoned investor or a novice investor, this is the best time, in my opinion, to invest in real estate. Now, why would I say that? It's very simple. Whenever there is some stagnation within the real estate industry, that's the best time to get deals, right? Deals are what attract the capital, right? A good deal will always attract good capital. Now, what's a good deal? Well, I like buying distressed properties below wholesale. The skill to buying right is learning how to locate distressed properties in your city, county, or state. Now, the good thing about it is we are giving away a free ebook called Distressed Property Investing. We talk about different ways of locating distressed properties in your city, county, state, what to look for, who to call, things of that nature. It is free. Once you master this type of skill of locating distressed properties, you'll never be broke ever again, because good deals attract the right capital. All right, guys? So to get the free ebook, click on the link below, scan on the QR code here on the screen, or you can DM us the word real estate and my team will get you out this free ebook. Again, it's completely free. Just want to get you this information so you can begin to get the bag while buying real estate. Stay blessed and holla at your butt.
Bless God, give thanks. Whoa. Bless God, give thanks. Bless God, give thanks. Whoa. Bless God, give thanks. Whoa. Big God.